Hello, welcome back. Today we are looking what the term leverage is. In Forex trading, leverage in trading refers to the use of borrowed capital to increase the potential return of an investment. It allows traders to control a larger position with a smaller amount of actual capital. This means that traders can amplify their potential profits, but it also increases the potential risk and losses. For example, if a trader uses 10:1 leverage, they can control $10,000 worth of assets with just $1,000 of their own money. If the investment goes up by 1%, the trader would make $100, which is a 10% return on their original $1,000. However, if the investment goes down by 1%, the trader would lose $100, which is also a 10% loss on their original $1,000. Leverage is common in various financial markets, including Forex, stocks, and commodities, but it must be used with caution due to the increased risk of significant losses. With that, thank you for watching. Subscribe.